take my hand, I'll take you higher than you've ever been. You've ever been.
Thank you for coming on into the live and sharing your essence with me in this eternal moment of which we all share an inextricable and inexorable part. Thank you for doing your part, for coming on in each and every day. Let's get into the charts, shall we? Booyah! Here we go. All right, so just as we've been saying, it's been traversing within this ascending channel before it was traversing in this ascending channel. Quite fascinating, really. Somebody was asking first and foremost about the GAN fans. We'll try to go over that. I don't really even know the history so much. I just kind of messed around with them early on and started to play around with them and the deviations of the look back based on impulse and retrace ideas, and trying to get it into these regions where you could look for mean reversion paths, or at least these diagonal fib paths. So there are free indicators out there. There's one over here that you can mess with by DGT called Pitch Fan by DGT, and it will auto draw that, and you can mess with the deviation and the depth of that. So you could turn that on and then it will auto draw that on your chart. So we'll just go to a fresh chart and show you how that auto draws for you. And that can be a course unto itself for where you would learn about that. So you would kind of see that we're in this mean reversion path of the 236 for potential higher time frame upside as well. So that's not necessarily the end all be all. We could continue higher on a larger deviation in this manner. So that's pretty cool. So that's Pitch Fan by DGT. Mess with it and teach yourself a little bit about it. All right, so yeah, that's one cool free indicator out there. So this is a cool thing. Are we reverting back into these paths? A lot of people are talking about diamond patterns and 25K, yada yada yada, and a lot of people are calling for 30K and 55K and yada yada yada. Let's just take it one break of structure at a time, shall we? So we're gonna go right into the liquidity and the heat map. What is the heat map? Well, it's when people lock their liquidity in the charts to get burnt to a crisp by the market maker. And let's go take a look at see who's crispy, shall we? All right, let's take a look. Okay, so let's first recap where we were yesterday. We were starting around this time where they were breaking out, and we talked about these guys cutting the queue, and they would come back for them, and they came back for one of the three targets. They still haven't come back to this guy at 27.42. I expect them to do so at some point. So this guy cut the queue and got punished. Boom. Burnt to a crisp. So that's what happens. So we're looking at this level here at 27.42. We put it out to the Discord previous to the stream, and we were talking about we're a hop, skip, and a jump from this pool down here at 27.42. So are we going to knock out this guy and spawn some bullish divergence? Perhaps, I don't know, but might be a nice idea to go knock this guy who cut the queue out of line. You still have two more guys down here and some liquidity stacked below. You are imbalanced by 7 billion in short liquidity, so this 28.4 region is a target as well once you start to knock some of these guys out of the game and turn the imbalance to the upside again. And it could shoot up any moment in time, so you got to be ready to pivot on a dime. So let's go ahead and look at the other time frames to juxtapose where we are. Let's see how y'all doing. Yo, 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 welcome. All right. 12-hour even Steven, skip it. Go to the 7-day. I went to the Ghibli Park, if you are aware of Ghibli movies like Totoro and Sento Chihiro no Kamikakushi, and you call it Spirit Away in America, but those type of Hayao Miyazaki Mononoke Hime and stuff, they have a theme park nearby, so we went to check that out with the kids. It was quite nice. Anyway, so at 29K, we still have this stacked region just above. So in terms of what I personally think, they would go grab some of these guys that cut the queue and threw their plan off, and then spawn some divergence and then fake everyone out and go grab the 29K to finish the job up here. So that's just what I think might happen, but let's just see if my mind can be changed. So we have yeah, some liquidity in single digits pushing 3.7 billion at certain regions here at 27 even. And if you look to the upside, we have a little bit thicker, so it looks like it's imbalanced on the 7-day to the upside region. You are developing some areas down below to take heed, as we put out yesterday as we were inspecting the higher time frames. The monthly was the most interesting, as it was starting to get caked up to the downside in a manner that could start targeting these regions down here at 22.6, which are starting to develop double digits in billions. Up here still got that double digit juiciness, just a hop, skip, and a jump away up here at 29K. And not that thick up here on the 1 month time frame, so we'll just go to the 3 month and start seeing it stack.
Liquidity.
I just felt like saying that. So here we go. We have 29K, 40 billion, 27 billion, 25 billion, 29 billion, 20 billion, and 16 and 15 billion. Starts to taper at 30K. So you're starting to see the 3-month picture of why we're hanging out here. These higher time frame pools, which have been building over the last 3 months, starting to look juicy up here as opposed to the double digits. But you're starting to get those juicy double digits getting in the 20 billions down here at 25.2. I can see why people are talking about that retrace. These people are leaving their trades open for a mighty long time and the pools are building. So that narrative shift, and the happy campers down here at 19.5 are looking to offload their positions at 30K. So are they going to fall short to start to eat them up after taking out the 29K pool? I like to play conservative. I don't like to go to exact targets. I'd rather front run and get out early, because these guys might not get their fill and they might come back to them at some stage. So let's go to the 6 month and check it out even deeper. Got 55 billion, 46 billion, 38 billion, and 28 billion up to 30K. And that's on the 6 month time frame. Just immediately above, you got 13, 17, and 2. And starting to get 32 billion at 26.4, 14 billion. So it is getting juicy right here at the 25K region. It just doesn't look it because the amount of color to get yellow requires 80 billion or more. So it is in that chilly region, which is to say 30 billion on a lot of these pools. Still looking like they're building some narrative of structure change or shift of structure to the downside at some stage. The year is glitching out, so let's go to the 2 year. Hey yo, Abominable in the house. So we're right near this guy that we were saying how rude of them to cut the queue. Let's make them pay the price and have a
fatality.
I'm slowly adding these little weird sound bites. I hope you don't mind. All right, so if we take a look at the 2 year, close to 100 billion at 29.2, half that at 29.6, and 60 billion at 30K. So the most likely point to hit, if it would hit, would be 29.2. Beyond that, they could leave these pools to survive another day as they start to encroach on the lower area. These ones are starting to get 100 billion and 87 billion and 65 below 19K. You get 60, 67 at 22, 50 billion at 23.6, 47 and 38 at 25.2. So you're starting to get these little pools develop. And of course, let's not forget 15. We have $200 billion at 15.2 just sitting there with a steady yellow band saying, don't mind me, but we have to, unfortunately, because that's a lot of money just sitting there. So at some stage that they might try to go tap that for a double bottom. It's not out of the question. You can't be a moon boy calling for 55K, although at the 55K region you do have 75 billion, 48 billion, 64 billion, 27 billion, 80 billion, 36 billion, 53 billion, 40 billion, 44 billion, and 60 billion. That is like $500 billion in shorts just chilling there, you know. So those shorts could be a target too. Interesting. So those shorts have been open all the way back here since March of last year. And those pools have been building steady and staying strong. So you had a $68 billion short at 52.4, and at 52.4 currently it's 75 billion. So it's increased slightly, and it hasn't. Obviously, there's people paying themselves along the path, but there are people adding, and their liquidations happen to be up here still in an increasing amount. So these marionette strings to the upside do exist. They cannot be ignored. So these things could be pulling the price up too, even though you have this dead weight down below at 15.2. Interesting. Let's go back to the monthly. So not much changes in a day. We're just recapping it for any of you that are just stepping in for the first time. Shout out to everyone here. Let's go back to the 1 minute. This is the 1 minute time frame, which is 6 days of data for BTC, and it has these bubbles which show where people open their trades and for what amount, and where the imbalance lies down below on the cumulative liquidation levels delta, and currently imbalanced to short liquidity, but this is only within that 6 days of time, and that's why we need to juxtapose all of this to get a comprehensive image of the liquidity. So this whole wick-wacking a price is to grab these guys that over leverage themselves. So they are really nearby, so could they come get this guy at 27.42? I'm hoping on it. We did say yesterday that was a fib level, so let's go into the fibs a little bit more in detail. So this external liquidity range fib, we have the 706, which we are attempting to SR flip on our way out of this drop to the downside on the daily time frame. And previously we had this rise to the upside, and the retrace bounced us at the 618 with a very nice idea there, and we started to use that impulse retrace idea to build a trend-based fib extension level at the 236. We continued higher and into the 706 786 region. We got beyond it, we flipped it at the 786, and we are currently above that, and we wicked into the one level of that projection. And then we used the other impulse retrace ideas to get a better minutia onto where that would go in more detail if it continues to the upside. So we can kind of remove this now because I don't want too many green ideas. So we'll just leave that there as if it continues and where it would fade. And if we go to the 4 hour here, so this is the impulse retrace, the 236 that we needed to maintain. We did, and we shot up to another impulse that we took from here, impulse retrace, and that gave us this region which we came back off of. So the 618 of this impulse to the upside is where we're looking to potentially see some divergence spawned off of this liquidity down here at 27.42. We're being patient and waiting for that idea to come to us down here at the 618. Are we going to see a bounce there or break through? So that is what we are waiting for to happen. Knock out this guy. And yeah, that's about it for the Fibonacci. And
accessing data.
Wait, what's going on? Wait, huh? Are you guys seeing this? Oh, I don't understand. Huh? What? Huh? What?
All systems operational. I was the last of the archivers tasked to maintain and monitor the power source for the simulacrum. Everyone else had fallen into madness, simulations within simulations, lost in infinite loops, forgetting about linear time entirely. They left me with a sense of self and the autonomy to detect and diagnose any anomalies. Little did they know the anomaly rose from the source itself, the 0-point energy. It's been at least a year I've been feeling incarnations of myself in the past. Positronic pairing was something they'd overlooked. They assumed each electron was unique. Who would have thought this entire farce to be a single particle? I must send a message to an incarnation of myself in the past. I downloaded all I could as to how we got here, from the microplastics that stopped our ability to procreate to the algorithms that captivate and control us. Perhaps this impulse can steer momentum on a better course. Hello? Hello? Where am I? Whoa, this is pretty cool. Where is this place? I'm in the 0-point energy? Are you guys out there? Hello? Wow. You guys don't believe what this looks like. Let's see if we can come back to the main screen. There we go. I'm back. Alright, so as we were seeing with this 0-point upgrade, we have Momentum Master here. The cloud is thinning and we are getting some selling volume out of the cloud, which is why I am not necessarily seeing the bounce to the upside first. I'm seeing this kind of sell-off down to this region. And can we get that last hurrah up from that region? I don't know, because this cloud is not looking as healthy as it could. So let's go to higher time frames and do a breakdown from the higher time frame, shall we? Because the weekly and the 2-week and the 3-week, I believe, closed in a way. So let's look at how that played out. How'd you like that live performance? That was all not recorded. That was all using a Stream Deck. Alright, so yeah, let's see. So we previously saw this turn in the cloud. What is this indicator I'm using? MomentumMaster.info at your leisure. You can check it out for more details. Go down to the bottom, toggle through the interactive HUD, heads-up display, and you can kind of see each of the components and what the trend cloud means, for example. And so we came to that trend cloud, it started to thin, we wicked off it with that Fibonacci in mind, and boom, we went to the upside. So are we going to eventually tap this adaptive and then come back down into these regions is the question. We are at the outskirts of the Keltner channel, which is an ATR-based Bollinger Band, which is more accurate than Bollinger Band, so we're on the outskirts of that. That's interesting to note on the weekly time frame. If we go to the 2-week, we also closed as an indecision doji, which could be a sign of reversal. The 2-week held strong as we thought it would, and yeah, didn't have much of a sell-off wick. We still have that cloud to come back to, and it needs to thin a little bit more, although this is a larger time frame, so it takes a little bit more time to react. But interesting enough, we are above it. And when we go above it, when we pierce through, we come back to retest at some stage, so we're looking for that to occur in the future. I think the 3-week, I don't have it on my chart, so let's just add it. Somebody was saying that that also happened to coincide as a close, so let's see how the 3-week did. So the 3-week, interesting. So the 3-week also got above the cloud and trying to SR flip it of sorts, but it's still quite thick, just like the 2-week, so we could come down into it as it starts to rotate. I've never actually looked at the 3-week time frame, so it only starts to have data from back here in 2019. Let's just go back and see how that interacted with it. It sure enough went to that cloud and kissed it a few times before, and then went down way below into the ATR region and then bounced out.
Interesting. So this is the first time we're seeing it in the purple in a thick manner in its history. All right, so we had the strong close for the 3-week, and the monthly is also coming about in a few days. And the monthly cloud is kind of seeing where we're getting resistance on that, but we could curve that in a manner. After closing, it starts to taper, and then we come back and then surge up within a month or two. Once again, it only goes back to 2020, so this is a new this formula is not old enough to show you the history, but it does respect those levels, which is interesting to note. All right, so if we go to the weekly time frame and start looking at the stochastic data on Momentum Master B, let's do that. How y'all doing out there? Booyah. Did we lose him? I was into visual production and audio production for a while. I did VJ and DJ stuff, so I can't help it. My creative juice flows out sometimes. Hopefully not unnecessarily. So, yeah, we got that double top scenario as we were talking about, and the average of the Williams is coming up nicely, similar to in the past. So we could still see the weekly. I don't know if it's going to maintain this for another week or two. We could see a lot of push within the 7 days before we drop, but this could be the end of the road, at least for a time, before we have something like this for 3 weeks of retrace. It could be within this week. Let's look to the daily time frame for that special something. So the daily time frame was previously at 76, bouncing off of the RSI. It was at the RSI before the close, and now it's down below, getting down at 44. And did the MACD cross? Yes, it did. So the MACD crossed on the daily time frame, and so that could be a front run for this coming down completely. So the MACD did cross on the leading MACD, and you are getting the baselines above the price about to cross here as well on the daily time frame for BTC. If we go to the 22, the 22 was previously giving us a little bit of juice, and now we're getting that higher time frame suppression of it pointing down on us. So this could get suppressed as the daily time frame wants to reset. Let's look at how the leading MACD crossed over here, and it's showing no signs of crossing up just yet. So it's in this domain, not down in this domain, or at least down in the 0 domain. So it could come down a little bit more and suppress this 22 from taking off. Just off the spitballing I'm doing right now. Baseline's also above price. Looking at the 12-hour, you're getting that push down, possible suppression idea as the MACD. And also one thing to note, the money flow is above the RSI. When it starts to get above the RSI, it likes to gravitate back down, and conversely, when the money flow gets beneath the RSI, it likes to gravitate back up. That's why we overlay these onto the Momentum Master B. Rather than have separate indicators, you can notice these differences and deviations between the RSI. After all, the money flow index is called the volume weighted RSI for a reason. That's why it's there. Okay, so this is looking like it's still wanting, the MACD is not showing a sign of crossing up just yet, so this could get suppressed and the Williams could still come down. The 6-hour getting a rejection on the RSI itself and the 50 level, One thing to note, what we just talked about, the money flow is getting beneath the RSI, so you could see a surge up on a 6-hour time frame to do one last hurrah and knock out some of the shorts before it comes down. Yeah, similar to here, you had bearish divergence that came down. You get the same kind of concept when it's below. And this could be a shoulder ahead and maybe making a shoulder to come up on the 6-hour time frame, although you're in that ambiguous space right now where nothing is really low and nothing is really high. Previously, when we were down here and we were talking about the 236 support and we were calling for upside, that was because we had congruence amongst the 22, the 12, the 6, and the 4-hour, so the likelihood of it going up was high. Now you're looking at it in terms of this cloud too. We're currently beneath the cloud, and if we come down below it, you can bearishly retest and continue lower now, and it's starting to thin. We were seeing this occur on the 4-hour before it happened. We were talking about this 4-hour. If it cannot reclaim the 4-hour cloud, then you can expect some downside to occur. Why is it not loading? Too much processor speed or something? Shout out to everyone here on the live. So we got we were starting to see this thin back here, and so we were saying if we break up to this 28K region, can't hold it and reclaim this cloud, it could start seeing this volume exit. So I was expecting this to occur, and I did enter a short up here. So I'm trying to see this guy get knocked out, so I'm kind of biased in that regard. But I was also seeing it happen in real time too, and I just follow where the liquidity goes. So yeah, we're seeing that cloud shift on the 4-hour already, and you're overbought on the 4-hour, and you got up and you're starting to come down. Could you double top here at any moment in time? Yes, you could, which is why you always protect your entry at all costs. And go to the 1-hour. 1 hour was previously overbought and coming down, but never really came down completely. We're starting to see that full reset here. The clouds started to get thick, and then we made a decisive move to the downside to pierce beneath it. Let's go to the 15. So right there was where you had that crossover event on the 15, and you could have thought about it shoulder, head, and shoulder to the downside. And yeah, you could be coinciding that. I'd love to see this come back down to these regions and just do a big red candle, just for me personally. But you are getting that 15-minute in the low region, and the MACD is coming to say what's up to the stochastic. Are you going to take off, or should I go say hi to the Williams? And then he'll go down to the Williams if that's the case. This MACD goes between both domains. It is a domain-free MACD, which is leading and likes to go say hi to both. So is he going to go down to the Williams and say what's up? Did get that alarm cross on the 15-minute with the crossover of the baselines and front run bearish divergence on lower time frames. So that was a smooth entry, and here we go. Break to the downside.
Fatality.
So stupid. Let's look at the S&P. So the S&P is breaking up. It gapped up. We were looking at the data that we pay for to see it going up anyway. We were expecting a gap up because we were watching it go up in real time. So it did gap up, and will it go down to recover the gap? That's what it generally does. And retest off of this perhaps. Let's go to a higher time frame to get a clearer idea. Show us the light. Illuminate. So we're getting a rejection of the cloud, which is thick. We talk about this all the time. When the cloud is thick, they go up and pierce it, break down at the cloud to reinforce their forces and come back. It's hitting it again. Is it going to get a rejection and come back and then start to shift this narrative of the cloud? Doesn't happen overnight, which is why you see these thinnings occur and have to front run it in some manner, similar to what we did with the 4 hour. So you're starting to see this thin, and then we pierced up and couldn't maintain the cloud, and bada bing, bada boom, we went to the downside, and then the narrative started to shift. And you're getting a nuke by the looks of it, which is showing that you are overbought on some significant indicators and timelines. It's over 32 different things it's looking at. You can look at the stochastic array on momentummaster.info for that idea. I'm not going to read it off to you. You can do it yourself. So this is the nuke appearing live in real time. So when the nuke appears, you want it to lock in on these higher time frames. Think of it like a rubber band being stretched. So when all these time frames are stretched beyond their exhaustion point, the higher the time frame, the candle that closes with that nuke symbol intact, the more likely a V-shaped like down action in this case would occur. Now you might get it on a 5 minute or two, but does that mean it's going to be that strong of a rebound? No, because the nuke would only have closed in this 5 minute candle state in these 2 minutes of it occurring in real time. So you'd have to watch it cascade and close on a 15-minute candle. So if it closes on the 15 with this nuke intact without getting sell-off here, if it sells off and resets the indicator and it disappears, it doesn't lock in here. So it's a candle close specific formula. It does appear in real time, but it doesn't remain unless it closed in that state. Hope that makes sense. So seeing it here, it's not loading right now, but yeah, you'd ideally want to see this close on higher time frames if that's what you were looking for in terms of a reset. So if we go to the higher time frame of the hourly, let's see the hourly. So we had previous bullish divergence on the money flow, which is what we saw this going up here off of one of these Fibonacci levels, which it did. And now we're getting to the overbought status and the 786 potential rejection here. If we cannot maintain this 786 region, then it might come back and consolidate within here and consider coming back down to the 236. Or if you want to extend this and play a trend line bounce or something, that could occur too. So you have the hourly time frame getting overbought, the 15, the 5, the 4 hour. Let's go look at how the 4 hour is. Most likely the 6 and the 12 are overbought as well. How do I know that? Well, it's part of the formula. But you had the cloud starting to thin, and then we bounced off the cloud. This is still looking nice for some upside potential. So this is why you don't immediately take this at face value. You wait for the higher time frame close of that idea. And we are SR potentially flipping this weighted moving average here. And the baselines are below price on the 4 hour, which is good. And the 4 hour is also getting some charge off of the RSI and the money flow. So it could come up here for that superb double top as well. So you got about 3 hours and 45 minutes. So even if you look here, we had one new close here, right, on the 4-hour time frame, and even here, and we still went up. So in a bullish run to the upside, when you're breaking structure like we were breaking this, let's just go to a daily time frame, we were breaking out of this broadening wedge, and it was a cup and handle with the inverse head and shoulders to the upside. Here you were breaking structure, you were within the structure. Here you were within the structure, so we came down. Here you broke structure and you were bullish at that time in January. So you have to think of the grander narrative and not take these at face value. It does require TA, but even without TA, you would be about 80% of the time correct. So those are pretty interesting, especially if, yeah, they close inside the structure on daily time frames and whatnot. So either way, going to the 6-hour. Load, please. Yeah, so the load, the 6 hour is also looking to potentially double top based on how the waves are open in this manner. Looking at the 12-hour, a lot can happen in 6 hours, but you could peek out here on the 12-hour time frame. Let's look at the money flow. It's beneath the RSI, so it could come up to the RSI and give it that boost. So this is why you'd watch it, how it closes. Now you are getting some purple cloud action that it needs to shift. So if it impulses up into this region, let's just say it does something like this, all right? It would come back. Oh, why is it not showing the, it should have a arrow. I'm disappointed. Where's my arrow? Give me an arrow. There you go. It should be on there. But okay, whatever. So yeah, if you come up to here and then you get kind of faded out and then you come back to the cloud as it starts to kind of curve in this manner, then you try to like kiss off the cloud and continue or something like that. If it does happen to make an impulsive move up to, let's say, this ATR region and then come back. That would be bullish for Bitcoin, wouldn't it? If that's the case. So we are seeing a bullish rise out of the ashes here, getting a buyback in response. So let's see what happened on the 5-minute time frame. We had this 5-minute candle and a 5-minute buyback, and we're starting to see some liquidity get spawned here on the divergence. What did they grab down here? Let's take a look. Getting a 5-minute SR flip potential of the adaptive here. Interesting. Got the crossover event and the 5 time frames oversold. Let's look at the liquidity here, shall we? Load, please. So they only managed to get this 50 million character and bounced off of that. They didn't even bother to go even lower. That's interesting. Is that because, look here, looky loo, what do we have above the price? So we have this $87 million short that opened here, and they just came up and grabbed that guy. And then there's another 2 that opened here, 87 million. So those bubbles that opened, they just went up and knocked out and said, no, thank you. And then they continue back after grabbing them. Interesting. And those are PDSRA candles. So those are market maker manipulations we are watching. And if we look here, there's still some stuff for them to grab down here, as well as the 100x up here. They could be coming into this, but still thicker down here. Sometimes you just gotta turn that off and follow the indicators. Maybe it's just going off of indicator probabilities right now. And the S&P bullishness. We didn't even get to go to the dollar just yet. Let's go to the dollar, shall we? What's happening with the dollar? Dropping down. So we're seeing that drop in the dollar that we were projecting out before to the potential 618 region. We're starting to see it fade down to that region perhaps. If the indicators will load and show me what the stochastic data is like, that would be kind of it. Booyah. Please light. Load, please. Would you please load? Too fast for the internet. There we go. All right, so the hourly time frame is oversold. 15-minute oversold, 5-minute oversold, and you could see a bounce here based off those 3 time frames being oversold. But the 4-hour time frame, and they did dip below the lows here, so they were taking out some liquidity grab by the looks of it. It could have spawned some sort of divergence here. Let's take a look. You had divergence that spawned here on the 5-minute, and it spawned a liquidity grab. Let's go to a higher time frame. Potential rejection off of the adaptive, which we talked about back here, and you could be seeing this drop down and close in that state. If it closes red, it will likely reset the stochastic and some of the Williams a little bit and bring this MACD down further. 4-hour still has room to close. MACD has not yet to cross down on the 4-hour, but it is pointed down. So unless you see this close in 3 hours in some sort of manner, it was previously overbought, so you're expecting the 4-hour to come down slightly anyway. You did get bearish divergence on the RSI, which is starting to play out. Could have like some sort of weird shoulder, head and shoulder happening though for the dollar. We were talking about it coming to that 618 of this external liquidity range region. That would show some sort of reclaiming idea. Right now we're in no man's land territory anyway, so a bounce does not realistically make sense right here. Let's go back to the S&P. So we were previously getting that nuke, so we're getting sell-off wick to possibly reclaim that gap. If we don't hold that 786 or 706 or 65 or find some sort of support here in this region, then we could come back down into this region, and there's only stuff like this waiting for us below, like a trend line bounce or something like that. So you would have to reclaim this in some manner if you're going to remain bullish, or you would come down. Why do I keep hitting that? So which one is it? Is it going to be, why is it not loading? So slow, faster, you can do it. There we go. So you have that higher time frame suppression support potential, but it's just getting sold off as it resets the 15 and the 5 and the hourly, and these 3 time frames getting exhausted. which is producing the nuke, among other things. So unless there's some sort of impulsive move up to here, then you could see some sort of fade and consolidation within this region while it chills out. And that could be a double top scenario to some downside. This is false move Monday, ladies and gentlemen, so you do have a gap down here, so you'd expect it to reclaim the gap in some way, shape, or form. Let's take a look in lower time frames. I'm just afraid to switch time frames now because it's slow. I don't like wasting time. So we had that crossover event on the hourly time frame, which is seeing this burst through. So that does produce something. And the cloud on the hourly is being maintained, but it's thinning, noticeably so. So we'll watch how this candle closes in the next 3 minutes. If it closes with this nuke intact, it would mean that that gets locked in on that time frame, which is more notable than a 5-minute candle. We'll come back in 3 minutes. BTC, we're going back down again. So the Monday, false move Monday shenanigans, knocking out those 100x guys on both sides by the looks of it. Let's just turn on the liquidation levels again. My indicator's not loading because of the internet. Let's go to the 15-minute and take a look. Load, please.
What do you mean he can see liquidation points? That's cheating.
No, it's not. The market maker can see it. How y'all doing? Booyah. That's what I like to see if I'm short. Go back and reclaim this region, please. Follow the liquidity. Go get him.
Fatality.
Heyo. What's up, weatherman? How you doing? Fatality. Let's go get him. I'm very frugal, so my take profit is there too, so just give me that guy's liquidity and then I'll be happy. And then we can reassess. I don't like line cutters. He shouldn't have cut the line. So it looks like it's getting rejected at the 786 here, and yeah, if the nuke closes on the hourly, then you could see a retest of this top trend line area. I wish it would show the top of my candle, like, or the arrow or whatever. So you come back and bounce off that, or come into this region, you know, meander around and try to figure out your way within this and create a shoulder, head and shoulder out of here again. Reattempt to this region at some other stage if you get rejected here, in which case Bitcoin would also take a Monday tumble. Looks like it's going down, back down again. It's not loading. It got too many indicators. Too many. I want to see that ML Applications real-time one. I want to show you how that one works. So we can watch people get liquidated in real time. HighBlock does it too, for the most part. You have to refresh it every couple minutes, but you can see where people go long, and then when they went short and they went and grabbed this guy, and then went back down. They said, no, you don't. They took out the 100x pool because they're just like, no, thank you. We're not paying you. So we got to rerun it again, actually. All right. There we go. Loading. All right. So they went and grabbed all the 100x here in orange, came up, hit that little 86 million guy. And yeah, they could come and clear these 50x if they're so inclined. That would make sense in terms of the stacking that we were noticing earlier today when it was more sparse up here back then, but they still went up and took out the 100x and then they're coming down. So they take out the 100x shorts in order to come attack the 100x longs, and they take out the 100x longs to go attack the 100x shorts. And if you watch this long enough for day in and day out, then you kind of get to see how price action are these traps, right? So they build up these pools down below, and then they come and attack them. And then the true shift comes out, which gives it a little bit more oomph because they start building up shorts here that they come and take out. And then there's less longs because they're scared because they were previously attacked. And then so they can make more aggressive moves. So if you're patient and you wait for a liquidity grab upon entry, then you can kind of like ride off their liquidity, which is what they do. You can also use this website, which I'm not going to load because it's going to slow my stream down, but it is v3.aggr.trade. And it will show you when liquidation events occur with some animations and give you 10-second candles. Even if you can't afford them on TradingView, you can get it across 18 exchanges. It's quite nice. So you can see these liquidations in real time and then use that to your advantage. So this is what you want to see. You want to see the liquidity grab, and then it spawns some sort of stochastic reset probability-wise. And then it also coincides with the Fibonacci levels, and then you should be smooth entry with very little drawdown. Not financial advice, all paper trading, of course. What? So, let's go see how that S&P candle closed, shall we? Let's go. S&P. Did it close on the hourly with the nuke intact? Looks like the nuke is still there, so by the chances are it did. Wait, what? Why does it? Oh, I see. It closes in 27 minutes because it started at 10:30 my time. I see. So you got 30 more minutes for this candle. Never mind. So we'll see how it closes in 30 minutes then, but we won't be on for that. Those with Momentum Master can see it. Either way. So we're going to bid you adieu, but first we want to give you an idea of where things are, recap, if you will. So some people will be seeing a cup and handle here, but the trick about a cup and handle, right, is like if it can't maintain the neckline of these double bottom ideas, like if it can't maintain this here, then it's technically not a cup and handle. Like, so a cup and handle would need to maintain this zone, if you will, at 27,658. If it breaks down here, then it's not really a cup and handle, but then you could just look at this as a falling wedge and it's still, apples and oranges. But to be technical, it needs to maintain this double bottom neckline idea, which it's attempting to do. Okay, so if we look at the hourly here, the cloud is still blue, but starting to thin. We previously saw that the 4-hour cloud was the potential rejection. Why is it doing this? Allow. Okay. So the 4-hour cloud is opening up to the downside with purple volume as it's not expressing volume entering here. The hourly is getting reset, and as is the 15 and the 5 minutes, so you could see a bounce at some stage soon for those time frames. So the 4-hour time frame stochastic is opening up to the downside, and you're starting to get that cross down on the MACD. Has not yet crossed, but could cross, which would lead to more aggressive downside momentum. So you got 2 hours for that to occur. Personally, based off the liquidity, I'm looking at these guys that opened and cut the queue, preferably at the 2742 region is where it's thick and it's a little bit thin, although it does get thick if we get into this territory of 2686, but then that starts to shift the narrative because we've just broken below some lows, and then it makes it even harder to get up to these guys. So if we're going to go get this 28.4 and 29k character, then we need to get these 27.42 characters out of the game and their pools cleared and spawn the divergence to come get these regions. That would be ideal. It's taken longer than I expected. I thought it would happen within the day of yesterday's before the candle closed, but everything happens in its due time. So that's what we hope to see based off the liquidity. And yeah, it looks like we're coming down nicely again to that 27.6 region. And yeah, the cloud rejection on the 4-hour has been true, and we're looking at the 6-hour starting to turn too and starting to be beneath it. So if we would come out, we would likely bounce to at least bearishly retest, so you could catch that bounce to bearishly retest, but also be aware that it is fading. Potentially. Everything's a potentiality. Nothing is set in stone. Everything is transient, as they say in Japanese. Shogyo Mujo. Everything is ephemeral. Shogyo Mujo. Mugen Hoyo Shikisoku Zeku. そう季節外れのこの雨がぼかして表情とその涙降り止まないうちねげらしかして顔シュッとふっと笑ってなってな具合進むそうかワンウィーク疲れた体でそうとワンドリンク Yeah, I've been here a long time. So, yeah, let's take a look at that. We are getting rejection now at the weighted moving average, coming back down to the adaptive. All right, ladies and gentlemen, that's the levels I'm looking at still. That 618 bounce at 27.427 is where you could think of something if divergence spawns or not. Nothing is set in stone. Light in the absence of eyes illuminates nothing. And visible forms are not inherent in the world. They're granted through the act of seeing. So you got to look carefully in the charts to see what you see. And yeah, that 4-hour though, and that 4-hour cloud. All right, that's it. I'm sticking to that story, and I hope you all have a good time. Once again, thank you for coming on into the live and sharing your essence with me in this eternal moment of which we all share an inextricable and inexorable part. Thank you for doing your part, for coming on in each and every day, and I will catch you on the flip. Peace.